Thank you for this chance to present the report of the Chief Investment Officer. I'm Dave Klassen, and I'm very pleased to be with you today. I'm going to focus my remarks on performance initially, and then I'll follow that up with some summary comments. Well, when all is said and done, it was kind of a remarkable year, a very unusual year, as all of you know. Both stocks and bonds did surprisingly well, really, though, as a result of the last 6 months of the year. The first 3 months of the year were very difficult, as you all know, as the onset of the pandemic first appeared. Again, stocks and bonds did very well, and that will provide context for how the various funds did. Let me provide a little bit of context in terms of where the assets actually are. In terms of the accumulation funds that you hold for your retirement, assets were about $1.2 billion at the end of the year. On the right side of the page, the assets that we hold for your lifetime income, in other words, to support your lifetime income, actually totaled $2.1 billion. The bulk of the active accumulation funds are in the equity fund and the balance fund, although there's been an increased use in the target annuitization funds. On the right side of the page, in terms of lifetime income, most of the assets are in the participating annuity, some $1.2 billion. Let me outline the most sophisticated chart and display that I've got for you, but it's the most important probably, particularly for those retirees who are annuitized. This outlines the health of our annuities and shows a little bit about performance and the metrics that we use in order to be able to grant increases. On the left side of the page is the basic annuity. On the right side of the page is the participating annuity. The dark bars represent the assets. The right side of those bars represent the obligations we have to you for your lifetime income. That ratio, along with our calculation of interest rates, results in something called the funded status, which shows the health of the annuities. And I'm here to say that both annuities have healthy funded status. In terms of the specifics, you can look down at the lower end of the graph to see the funded status as of September 30th. The basic annuity shows a very healthy funded status above 100%. And as of September 30th, according to the prevailing AA corporate discount rate, which is the most utilized, the participating annuity had a funded status of 96%. But as you can see, as we neared the end of the year and you migrate to the left side of the graph, that the participating annuity's funded status has improved since September 30th, and at the end of the year had a funded status of over 100%. Again, very healthy, particularly compared to other state and local pension plans. The next slide shows the progress we've made in reporting for the accumulation funds for active employees, and you'll see the quarterly statement that we send out. I think of note that markets really influence the positive returns for accumulation members. The other thing I'd mention is we've made extraordinary progress in showing how the funds have done versus a peer universe. And so the third line in all of the funds really shows the peer universe of Lipper Analytical, which shows the peer median. So you can see that these funds have performed well, net of all fees, relative to peers. The other item to note is that we now have 11 funds coming up and out with 2 new target annuitization funds for younger members at the end of the year. So let me return now away from the numbers and to a little bit more summary comments and prose. But again, really kind of an extraordinary year of strength following weakness in the first 3 months of the year. The economy, while uneven, has rebounded, so the markets have anticipated that economic growth strength. The speed of the recovery, no doubt, will be predicated on the virus, vaccine deployment, and the extraordinary policy supports. There's been a very positive reaction to the U.S. election, but interest rates have started to rise, which could be an impeding factor, although I would add that inflation does not appear to be a problem or a risk right at the moment. I'd also summarize and reiterate my comments. The accumulation funds for active employees performed very well for 2020, especially relative to peer funds in the universe. So just again, some more specifics before I conclude. The stable value fund has really been the bedrock retirement investment is designed to be, and had slightly positive performance for the year of 1.68%. The bond fund continued to have positive returns and was up 8.69% for 2020 as interest rates declined. The balance fund and target annuitization funds, which hold equities, fixed income, and in some cases, stable value, performed positively and surprisingly positively with performance of 9.17% to 12.47% for the TADs and 12.74% for the balance fund, showing the benefits of diversified retirement portfolios. The equity fund had a very strong year and was up 15.05% for 2020. And finally, in terms of the accumulation funds, the Global Sustainability Index Fund had a positive return of 14.83% for the year, benefiting from sustainable business practices of the companies underlying the portfolio. And on the right side of the page, I've already outlined the health of the basic and participating annuity and have some specifics there. So finally, and in summary, I'd leave you with a few summary comments. The accumulation funds for active employees continue to generate competitive and positive returns with lower fees compared to the funds in the marketplace. The participating and basic annuity funds for retirees that offer lifetime income have healthy funded status at year-end 2020, although we were unable to give increases for 2021. Most importantly, Faith and Finance continues to be integrated into all portfolios with our responsible investing program. The Pension Board's Balance Fund was relaunched as the Sustainable Balance Fund in the first quarter of 2021, and you'll hear more about that, and certainly the communication from our end has been abundant. And then I'd add that the private market investments in the annuities in the areas of climate solutions, education, and healthcare access are impact priorities as we look to have a positive impact on the world society while generating first-rate returns for all of you. So with that, I'll conclude, and thank you very much.